everybody. Welcome to your live market update and charts of the day. I hope you're well. Thank you very much for popping in. Always a pleasure and a privilege to see you here. And let's see what we can find out today. There's some key headlines to keep an eye on, of course, and then the all-important charts to see if we can find anything that's setting up. There's a few very nice positions on the ASX, actually, we'll talk about in a moment. But before we start, just a reminder to remember that this is for education purposes only. Please make sure you do your own due diligence on anything you see here. Make sure you follow trading plans. And of course, manage risk on every trading action consistent with your own personal objectives and financial situation. Let's start by looking across the news wires today and see what the headlines are. Of course, we saw markets higher again, both the S&P 500 and Nasdaq hitting record highs on the back of some CPI data that was softer than expected, and a continuation of great earnings. We're still over 80% of companies reporting so far, and there's around about 90% of the S&P 500 done so that are beating expected EPS. The other big news yesterday was, of course, the China trade deal was pushed back another 90 days. I think most of the market had priced this in. Nothing apart from that, which is very significant at this level. So tariff levels will remain at 24% for right now. And that is, as I said, was expected by markets. So no great news there, but the CPI data has been softer than expected. It is flying in the face of what many people thought was a potential inflationary impact of the tariffs. If we look at the US futures, they're sort of flattish so far today. Asian markets are mixed. I looked at the ASX last about 20 minutes ago and it was down a little shy of 0.5%. We are seeing some buying into materials on the back of moves up in gold and copper yesterday. European futures are pointing to a cautiously positive open simply because of where the markets sort of ended up compared to where they started. In the FX world, the US dollar index edged lower and is trading mid-range. We'll have a look at charts of all of these in a moment. Gold is holding the 3,350 support. Copper is showing early signs of buying after that tariff-induced drop that we saw after 50% tariffs were imposed on US imports of copper. And oil just continues to sell off. We saw it right throughout last week, and we are through the next support level. Whereas Bitcoin's doing the opposite. We're challenging record highs with 120k resistance holding. We had an intraday breach of that. We'll have a look at a chart of that in a moment, as I think it's looking quite tasty. But we do see that a little pullback in Asia this morning. In terms of data today, as well as continuing earnings and trade news, we've got German CPI. It is the final number, so a deviation from what's expected isn't likely, or is less likely, should I say. And then we've got the EIA data out of the US, which obviously may impact on oil price. Just keep an eye on UK GDP, US retail sales, and weekly jobs tomorrow. They may all impact, of course, on what we see. Right, okay, let's just check out some charts then, shall we? We're going to start with the S&P 500. And you can see there that we are powering higher. Yesterday's price move very, very positive, of course. And what we are seeing from that is fairly flat day in Asia, as I've said, but most certainly this is a significant move to the upside. This is the market regime indicator you see in front of you. If we look at the Nasdaq, very similar story. We actually breached record high on Friday, and then we've got continuation of that now up around about this 23,900 level. If we just look at the hourly chart this morning, you can just say we've just paused a little bit, possibly a move up to that 23. I would say 23,900 is probably a good level, nice round number to have a look at So maybe worthwhile being patient. Be interesting to see if we get a little slingshot impact when the European markets open later. As I said, the US dollar index is looking a little shy. We see that drop off yesterday after that CPI number. You'll see it in more glory here. There's that CPI number coming out, and just a continuation of the selling, a little bit of profit taking towards the back end of the US session. And we're sort of fairly flatlining in Asia today so far, but this looks really quite bearish again. And we'll see that in some of the crosses in a moment. Somewhat surprisingly, I would have expected gold to do a little better. We sort of looked as though we were going to come up and test this 34.30 resistance level that's been tested 4 times over the last few months. But the fact that we've now got an established support at this 33.50 level is important. If we look at the 30-minute chart in Asia, you can see there's a potential short-term range with 33.55 being the level to keep an eye on, and a potential move up to around about 33.70 if we do get some buy momentum behind this. But at this stage, it doesn't look compelling, but it looks as though it's worth keeping on your radar over the course of the next few hours. I referenced copper recovering a little bit after this major drop we saw once those tariffs are imposed. And you can see there that breach of 448 looks important. We're now back over 450. But we're still, you could attribute this to a bit of profit taking. One wonders whether we're seeing a little bit of value in this now from an institutional point of view. 457 is probably the next port of call on this. Should we get some buy momentum? But if we look at the hourly chart, that isn't happening today as yet. So you'd be looking for a breach of maybe 453 with a 4-cent move to the upside with some potential. Onto oil, I referenced the sell-off that we've seen of late, and this is obviously due to OPEC Plus being quite adamant that they're going to see some more changes in production, increase in supply from September. This is sent oil price down. That EIA data tonight will be important. We are pretty flat in Asia, but that close yesterday was the lowest close since back here in early June. So quite a significant move technically. If we breach this, if we follow through on it, the EIA data doesn't come out well, we could see it drop to around about $61, so around about $2.50 from where we are now. So there is a potential trade on. Look for a breach of the low from earlier this week. So around about that 63.28, I think, could be the level to keep an eye on. Now, we reference Bitcoin. We'll look at the daily chart first, I think. And you can see us pushing up against this resistance that was there really for most of July. We had many tests of 120,200. And you can see there we tested it last night as well, closing almost bang smack on the record close there from a month ago. We've had a couple of days we've had an intraday foray above that level. The latest been a couple of sessions ago, and you can see we actually got up to 122,260. So despite the pullback in Asia today, it doesn't look like a compelling pullback. It looks maybe a little bit of profit taken from people who are short-term trading this. So I suspect this 120,200 level is worth keeping an eye on, possibly setting up for a high probability trade to the upside of around about 2,000, up to that high wick from Monday's trading. So just keep an eye on that over the next few hours. At this stage, it's way too early to call, but a breach of that level could be technically important. Right, okay, so that's our major asset classes covered. So possibly gold and the Nasdaq worth keeping an eye on for right now, in case there's additional buying, but just watch copper and Bitcoin as well. Into the FX markets we go, and we'll start with the US yen. Here on the daily chart, you'll see we're stuck around the 200 MA. If we just pop this on the shorter term chart, you can see We've had some buying over the last hour or so, which looks quite significant into the USD. I suspect that's yen weakness. Yes, it is. If we look at the euro yen there. So I'm not compelled by the US yen traders. I think it might get stuck maybe 20 pips into this range here. At this stage, it's looking interesting, but we've just moved out of range in the last hour, which is noteworthy. As I said, the euro yen's looking far more compelling on the 4-hourly chart. You can see there with that sharp move up in today's trading so far. Keep an eye on this level at 173, which I think could be significant. You can see this was last which traded at this level last on the 28th of July. And just take this back a little bit. You can see the importance of this level over the last month or so. So I'm just going to push that up a little higher to that 173 level. Nice round number. Could be a breach of that. If there is, then there may be a pause at around about 28 to 30 pips to the upside, but could be on for a move of up to 55 pips. That's a very strong chart on the euro yen. As I said, worth keeping an eye on. And one of the reasons this will be a positive move is if we look across multiple time frames. Let's just bring this up a little bit so you can see better. On the daily chart, there's been resistance. On the 4-hourly chart, there's been resistance. And the hourly chart we've already talked about. So a multi-time frame potential move over 173 could be technically important. Just check on a couple of the other crosses. If we look at the Aussie yen, not quite as compelling on the daily chart, but there is a level approaching which may be of interest. We'll just put it on a line chart just to sort of give you context and a little clarity here. So just keep an eye here on, again, if we were to take the nice round number of 97, then there could be a move up towards this 98.30 level. So around about 130 pips if we look at the long-term chart. But you can see the importance of this. Again, on the daily, you probably push it up a little on the 4-hourly, but we've already suggested that perhaps a move over 97, being the round number, is more compelling. And if we look at the hourly chart, again, you can see some price action around this level, both here and here. Pop it back onto the candles. So just keep an eye on this, but I do think the euro is more compelling for right now. The Swiss yen may be interesting, but I think it might hit into some traffic there. So one other chart which I was looking at earlier today, but has since sold off, was the GB pound Kiwi. Looks as though it sort of made its way up to that level, which was a fairly predictable pause level around about 227. 226.56 is a level to the downside to keep an eye on. There does seem to be some buying coming into the Aussie and the Kiwi at this stage. So as a potential short trade and something away from yen crosses, maybe the GB pound Kiwi at around about 226.50 might be worth a look. Possibly a move I would be potentially placing a profit target, maybe around about 226.20, as we might hit some traffic here. So around about a 30 pip move. And as this was sort of straight up and straight down and straight up there, it could be a high probability move if the market is looking at this in a similar way. So an alternative to keep your eyes on, without a doubt. So of all of those, I like the euro yen probably the most, just because it looks really compelling. If it breaches 173, I'm going to make that my FX chart of the day. But just keep an eye on the yen crosses with that GB pound strength. The GB pound yen would be an alternative, of course, but we do have that 200 is a really key level on this if we do get a breach. So maybe the GB pound yen is worth keeping an eye on. You can't get more round than that as a round number. So GB pound yen or euro yen if we breach key levels, of course. So worthwhile being patient. And GB pound Kiwi, should we potentially see some selling in the GB pound, which would take us possibly 30 pips to the downside there. Okay, so let's have a little look at some ASX charts. Overall, positive down the ASX. Let me just quickly check where it's at. So yeah, still down around about 0.5%, just for your information. Resources holding markets up a little bit. Utilities and financials very weak this morning. So anything outside of those sectors could be interesting. So let's have a look at some of those interesting ones. 360 ASX, we talked about last time we met. We said watch 4080. We breached that yesterday and we've had follow through today. So although that isn't a massively compelling candle, this is at record highs for this stock and one which looks as though it's got an increasingly compelling reason to have a look at it. I just think this stock is heading up towards that $50 mark over the next couple of months potentially. There doesn't seem to be a cessation of any buying really in the sort of long term. We've had a couple of pauses along the way. One stock that we haven't seen pauses in is LYC. This was our chart of the day here, was our chart of the day here. And we just keep on shooting to the upside, of course. In a good place from a rare earths point of view, the continuation of China tariffs is helping this to the upside. And 1344 is just an astounding performance. There it is on the weekly chart. On the monthly chart, you can see there record highs kicking in. There's no reason at all to suspect this won't keep on coming up. Even in today's price action, you can see on the hourly charts and so on, we've had 3 consecutive positive hours as the buying continues into LYC. Parenti is also looking interesting. It was a stock that we talked about again last time we met. We had a little pullback yesterday, but the buyers are back in today and we're stretching seller resolve as we sort of pop up to $2 again. This is levels not seen for some time, but interestingly, it was resistance before giving things up back here in right the way back in 2019. So really difficult technically to hang your hat on anything here. As a mining services company with resources doing well with China where it's at, I think this is not a bad place to be. And that breach of $2, if we get it, is noteworthy potentially. If you like your gold stocks, if you think the gold is going to go up, then Evolution Mining was one that caught my eye today. I had to look through all the gold miners to see which one I like best in terms of a technical picture. So there was a resistance here on Evolution at 790. You can see here we've tested $8 in this morning's trading. We're testing that right now, I think. Yeah, so we're at 7.99. The sellers are at $8. I'd like a move over $8, and I think there's a possible move up towards this 860 again if we get a breach. So maybe around about 6%. But if you like gold stock rather than the underlying CFD, then that maybe isn't a bad place to have a look. And one slightly more alternative one is GrainCorp. You can see this agricultural stock's doing well today. This is retesting a resistance that was in place for most of June and looks as though it's tested it this morning but just failed to breach it. Just keep an eye on 792, maybe even wait at $8. You can see there if we look at the wicks, it's been around about that $8 level that we've hit. So that looks like worth waiting for. But again, if we look at previous price action, there may be some resistance possibly around about this 834. So it would be around about a 4.5% to 5% move possibly. But as an alternative to just piling into material stocks, which is the temptation today, this could be an alternative to have a look at. So of those stocks, then look, 360 ASX I just think is a great stock, and Again, it's non-material, so it's attractive. LYC is obvious. I just want to quickly check in on the lithium stocks that were flying earlier in the week, but I think it pulled back significantly. Yeah, there we go. So PLS bashed through this 200 MA, but has since seen a sell-off. Uh, Potential short opportunity here, I wonder. Back down to $2. Um, so if you like something alternative, that could be worth a look. Tech stocks doing okay too. If we look at NXT, we're still threatening this resistance here. Oops, let's get that better. At around about 1470. Right, on to the US. Couple that we've been keeping an eye on. Robinhood, the broker, is stuck here at around about 115. It looks a little stubborn over the last few days. We've had 3 attempts to breach it. Maybe this is it for now for Robinhood, but we shall see in today's trading. A breach of maybe 118. If we breach these wicks here, I think that looks like it could be very interesting. Possible move up to 124, 125 on that. Nvidia just continues to look compelling. We've got an ascending triangle formation here. Um, which is pretty well technically perfect from a textbook point of view. So you can see those higher lows with that resistance at around about 180, 283. As I've said, I suspect this may work its way up to $200 in the not too distant future. And that'll be substantiated if we do get a breach and some more buying through this 183 level. And Microsoft, after this pullback, could be giving us an opportunity here. You can see we had the pullback to a previous resistance, which now looks like support at 518. We like this around about the $5 level, but we also see this as a potential opportunity in Microsoft. Possible move back up to around about 550, which was its high back in late July. That's around about 4.3%. So it may be the sort of strategy where you accumulate a small position here. See if we breach 550. If we do, then you can accumulate further into it. If we don't, if we pause at that level, it might be worth taking it off just to bank it. Home builders we've talked about as well. Not surprisingly, let me just make sure I've got the latest data on this. PulteGroup were our favourite the other day. We suggested that this would be worth a look. Should we breach 121? It actually did that in last night's trading up to 123.27. Undoubtedly helped by the increased chances of further rate cuts. September's priced in for the Fed, but further rate cuts later in the year would obviously help home builders. And if we look at a monthly chart, you can see the potential upside on this possibly to around about 135 in the first instance, and then maybe even up back towards 150 in the medium term. So a couple there for the US, for those of you who trade US CFDs. I'll probably plant my flag in PulteGroup in terms of where it is right now, but I think NVIDIA is just shaping up like a coiled tiger or whatever, crouching tiger, coiled spring. There we go, that'll do, for a potential move up through that 183 level. So I think that's one really, really worth keeping an eye on over the next few days. So there we go. I think that's it for now. Just a little note. I will be in Melbourne tomorrow, flying over from Perth, with a little session that we're doing at Go Markets. If you want to pop me a little, if you're in Melbourne and you want to pop along, it'd be great to see you there. At the Go office, putting on a little wine and some nibbles and just I'll do a little presentation. But we're also streaming that presentation. It'll probably on GoToWebinar for tomorrow's session. So if you want to pop along to that, then and you can always pop me a little email at mike.smith@gomarkets.com, either for the streaming, or for the to pop along as well. As you go, if you wouldn't mind giving a little sort of thumbs up like to the video, that would be fantastic. And thank you very much for being here. We'll see you soon. Take care, trade safe, and catch you very, very soon. Bye bye for now.